It's Friday, July 31st, 2020, and our big tech story for the day is one that was published earlier today in the Financial Times or on the Financial Times website. Title is NVIDIA in talks to buy ARM from Softbank for more than $32 billion. The writers are Arash Masayoshi, Tim Bradshaw, and James Fontanella Khan. So why is this a big story for the day? It's the big story because it's got a lot of facets to it. So the first of those facets is the big price tag. So we're talking about here a significant amount of value in terms of combination of cash and stock, $32 billion. We're also talking about a kind of a chess game that's emerged between SoftBank and NVIDIA with regards to what was once purported to be the crown jewel of SoftBank's portfolio by none other than Masayoshi Son, and that happens to be ARM. And there's a quote here in the story about that Mr. Son years ago said that ARM would provide the linchpin for SoftBank's whole push into the innovation businesses that they've acquired in the tech space. But because of some brash behavior, which seems to be right out of the work fast, break things, and then come back and do and fix them up later school of quote innovation, end of quote, SoftBank is now in an exposed position. Going back to what we said at the top, the value is big, no doubt about it, $32 billion. But when you read deeper into the story, you see that that was the price that SoftBank paid for the business in 2016. So how can NVIDIA actually walk into this as an opportunity? It's because of some behaviors on the part of SoftBank management that have soured the subsidiary. So the story, one of the takeaways here that's very important, even for early stage businesses, is the rather abysmal track record of mergers and acquisitions where the acquirer is a tech company and the object of the acquisition is a tech company. It's one thing when a private equity firm actually comes in and buys a company because they are not a tech company and they're buying something that's a tech company. So in the relationship, the tech company that is acquired has the latitude to operate as it was in the past, independent of the parent. But in this case, because of the fact that SoftBank stepped into this, and they started making decisions, and the story here talks about the IoT division of ARM being yanked out of ARM and put into a different subsidiary. They talked about abrasion between ARM senior management and SoftBank China's management. There's now a situation where the subsidiary is no longer performing to the expectation of the acquirer, and on top of it all, as the public is already aware, the acquirer is in a cash crunch, selling off assets to raise cash. So we've written in a number of stories over the last couple of months about brash CEO behavior and negative ramifications on the companies that they represent. And the regrettable situation where boards of directors portray themselves or depict themselves as powerless given the action of these CEOs. But there is a financial ramification to that kind of bad behavior, and this story here is an example of it. Now, for NVIDIA, it's a sweetheart of a deal. It is a sweetheart of a deal because with the acquisition of Mellanox and the effort that NVIDIA has made, the considerable effort over a decade to not only support research at the academic level, but also to to participate in the creation of supercomputers based upon serial processing, parallel processing uh, um, in over its semiconductor architecture, its GPUs. So the GPUs are capable of repeating the same task thousands and hundreds of thousands and millions of times across millions of cores, which expedites the processing of many artificial intelligence applications, amongst others, machine learning as well. And that type of activity is very much a data center activity. So if NVIDIA were to acquire ARM on top of Mellanox and on top of GPUs, they'd have an incredible position in the data center market. Not necessarily to go head to head against Intel, but to actually mine other opportunities that Intel might not be thinking about. There's also mentioned here in the story of a kind of low performance on the part of ARM. And anyone with a knowledge would have to ask the question, well, SoftBank, did you know what you were getting into before you got into it? Because anyone looking at ARM would know that ARM is a design company. And they do not produce semiconductors. They do not produce CPUs. What they produce are architectures that companies like AMD can exploit to create system-on-a-chip solutions. I myself, on one of my earliest careers in the tech space, worked for a company called Digital Products, which morphed into NetSilicon, which was acquired by Digi. And NetSilicon, I wasn't with NetSilicon. I was with Digital Products, but I'm familiar with the NetSilicon story. But they were exploiting the SoC capabilities, and those SoC capabilities came from ARM. So when the story remarks that they increased their quarterly performance from 2.1 billion, I think it was, or maybe 1.2 billion to 1.9 billion, this is not a big buck type of activity. This is an intellectual property thing, but that intellectual property has major, major, major ramifications across markets. So the key takeaway here is don't let your CEO shoot off his mouth in a way that's going to blow your company's position. And secondly, don't bite off more than you can chew by buying a company at a very high price tag quickly without knowing what you're going to get into. And have a nice weekend. My name's Ira Michael Blonder. I'm the CEO and founder of IMBEnterprises.com. Check out my Twitter page, Mike the Bebop, and check out our webpage, IMBEnterprises.com.